Okay. So you're trying to think about this business idea that I have. How is it going to be lucrative? Will it make money? What are the pros and cons? What are the expenses I'm expected to incur and all of that? So we will help you prepare a financial projection for your business. And then as you go into your business, you start generating revenue. You start generating revenue. We would also help you prepare your financial records. So we work with you at every stage of your business, whether you're trying to start off or you're also trying to like record, you're trying to have an idea of your business. Okay, this is the kind of revenue I'm making at this period. How much should I spend in terms of marketing to be able to 10x my revenue or to be able to 5x my revenue and all of that? We will help you all through that process. So I always like to break it down. We could say we are financial advisory, we're a tech startup, we have a software and all of that, but it's always good I break it down. And yes, the elephant in the room, the reason why we are here is very interesting. I wish I was coming to tell us about how sweet ice cream is. But the good thing is, while I was reviewing the tax, the full document, there is a form of good news in this whole brouhaha of tax and everything. So, but before I will go further, I would love us to introduce ourselves. So just tell us your name and tell us what you do. And maybe you can add where you're connecting from. So I could say, my name is Grace. You can drop the comment in the chat box. So I could say, my name is Grace Oliver. I'm a financial analyst and I'm connecting from Lagos. Please, I would love us to introduce ourselves in that manner in the comments of this session. And I also want to applaud Adana Ohadima. She was the first person to join. I was still trying to set up the Zoom and she was already here. So let's introduce ourselves. Okay, after seeing our intro, I would read it shortly. Okay, okay, so we have Obi Okafor, accountant connecting from Port Harcourt. You're welcome. We have Adana, a medical doctor connecting from Imo State. You're welcome. We have Oyinlade from Lagos, Nigeria. She's a product manager. You're welcome. Let's keep the intro coming. We have Eunice Joshua Miti. Sorry. So we have Eunice Joshua Miti, optometrist connecting from Abuja. You're welcome. We have Shalom Solomon connecting from Ibadan. You're welcome. We have Oyime Akpologun from Lagos into cyber security. I know him. He's into cyber security. You're welcome, Oyime. We have Elizabeth, HR professional, connecting from Ibadan. You're welcome. We have David, a software engineer, connecting from Lagos, Nigeria. You're welcome. We have Mayowa, an architect, connecting from Nasarawa. You're welcome. We have Tiana, data analyst, connecting from Kano. You're welcome. We have Amina, connecting from Lagos. You're welcome. You are all welcome to this webinar, and I hope and I pray that by the end of today's session we'll be able to demystify every story and everything that has to do with the tax and how it concerns us. Yes, so it's the reason why I had to I had to communicate the streamlining that, okay, this is for individuals that are individual business owners, SMEs, that's SMEs, employees, and freelancers. You're an entrepreneur, you are you have a small business. It's important for you to be abreast of it. So we still have some intros. Thank you for the intro. We have Olayemi, Customer Care Coordinator from Lagos. We have Peace, Program Officer connecting from Ondo State. You're welcome. We have Shegu James, DevOps from Lagos. You're welcome. We have Ikechukwu, a businessman from Lagos. You are all welcome. So I know we are connecting from our place of work and business. So I would want us to go right into it. So we have Lee connected from the United States. That's interesting. You're welcome. Mr. Akodu, aka Cody, content creator from Lagos. You're welcome. Orobome, COO from Lagos. You're welcome. You're all welcome once again to this webinar, and I will be going right into it. Okay, so we are basically talking about the new Nigerian Tax Act that will be taking effect in 2026. So the thing about this whole tax thing is that, in the informal sector, prior to now, the informal sector, there is no um a measure to, to track and tax the informal sector. People that are working in, maybe they own a shop, they own a business, individual business, online vendors, and all of that. And so this whole process is to be able to ensure that everybody comes under that tax window. So, but it's not just enough. We know our country. So it's not just enough to bring everybody into the tax window, but it's also important. It's also something we'll now need to maybe take our government more seriously, since, everybody now pays tax. I know that for those of us that work in structured companies, we've been paying tax already from when you started working. So it's nothing new, just that maybe if you had a side business, you might not be paying tax on that if your side business is not registered. So for people that have been paying tax earlier on, it could come off as a slight reduction in tax payments. So for the employees that have been paying tax, there could be a slight reduction in your tax payment. So, but I'm just going to talk about everything I have here is based off the Nigerian Tax Act. It's a 215 page, the one that applies to us. There are other of them, but this one applies to us. The 215-page document that I had to read and extract the ones that, apply to being an SME, being a small business owner, being a freelancer or an employee, which majority of us, if not all of us here, fall under that window. So like I mentioned, the aim of this whole tax thing is to consolidate everything all together. They were very different tax laws that, applied in different cases and all of that, but their goal was to consolidate the whole thing and to ensure that the whole nation is paying tax. If we have to look at the percentage of persons paying and not paying, they were more. And the thing is, every other person, they are also making money. Prior to next year, only mainly employees, registered companies were the ones that are paying tax. In fact, small businesses that were even registered, some of them were not paying tax. If one of the reasons why sometimes you don't want to register your business is because they said, once you register, you begin to file and then you begin to pay tax. So some persons do their business in their personal, what are they calling it? Their personal name and all of that. But the whole thing from January 2026 will be changing. Do you understand? And so they want to ensure that the whole nation is paying tax. The goal is for us to simplify, to ensure also, their goal is also to ensure compliance. So when we say compliance, it means that to ensure that more persons are obeying the law. Pay your tax is like it's a law in a country. To pay your taxes like a civic responsibility. So it's a law for everybody to pay their tax. Structured companies prior to 2026 were actually paying this tax, but now they want to ensure that everybody is under the law, that everybody is compelled to pay their tax. So, but I have seen questions that, oh, we they deduct it from my account? Will they do that? Will they do that? If you work in a company prior to now, You already know that you file your VAT, you pay your tax. The government does not deduct the tax from your account. So no, to answer that question, and I hope some persons that are already okay, yeah, the meeting is recorded, so would definitely share it. To answer that question, the government will not come and deduct the money from your account. The government will not block your account and all of those things. No, you would have to pay your tax yourself. You will have to do the self-assessment. You have to open up your finances to the government by yourself. So you know that if you are not paying your tax, you are defaulting in your civic, will I call it civic responsibility? You are defaulting in a law that has been set in place. Do you understand? But the government is not going to come to do that. But for now, I personally do not know what they intend to do to defaulters, but it's always better that since they have brought up this measure, it's always better you stay compliant and understand how best to stay compliant with your tax. So there are different categories I want to talk about. I'll talk about the company taxation, then I'll talk about the individual, and then I will talk about other tax that maybe applies to us and do not apply to us. And just for you to have an idea, especially VAT, especially withholding tax and all of that. So I would start with the company owned. I also have intention of splitting the videos if they become very large, so that if you want to just go over the company taxation again, you can easily go over that. If you want to go over the income taxation as an individual, you can easily go over that. So we're going to look at the overview of the company tax, CIT as it's called. It's called company income tax. One thing important you should note is what they are taxing you on is not your annual revenue per se. What they are taxing you on as a company is they call it your assessable profit. What it means is when you generate a revenue, let's say for example, you are into cake making, and then somebody pays you 100,000 naira for cake, and then you buy product for say 20,000, you enter transportation of 5, 10,000, that's 30,000. You bought fuel into your generator, you bought what else again? You paid your labor. Now you need to calculate your own labor. The whole idea is for you to, the whole idea of this webinar, so it's not just for the tax, it's just for you to also review your business and begin to think about your business differently, because now you need to report some of these things. So you calculate your labor. Let's say you have calculated everything now, and you are everything costs about 80,000, including your labor, your transport, your probably your electricity, because you're paying for electricity to make that cake. Then you are left with 20,000 as the operating profit. That's what we call profit before tax. So that 20K is what is supposed to be taxed on, not the 100,000 you got in. This is slightly different for personal income tax, but for this is what they call your assessable profit, or it's called profit before tax. If you are familiar with income statements, you will see your revenue, you will see your cost of goods, less cost of goods, you will see your operating expenses, salaries, and all of those expenses. Then you will see maybe you will get your depreciation, amortization, then you will get down to profit before tax. So is that profit before tax that is calculated on? Prior to now, company income tax is usually 30%, which is not changing, but there is an exemption criteria, and that is where we fall under. Of course, my goal and prayer for every business person here is that your annual revenue will grow bigger than 50 million naira in a year. So, but before that, before it goes beyond that, so if your annual revenue is already more than 50 million, you know that you do not fall under this exemption category. Do you understand? You do not fall under the exemption category. Then for persons that their annual revenue it's below is 50 million and below, and they have total fixed assets not exceeding 250 million, you are exempted from this tax. So you do not pay tax as a business owner. It's a good thing for registered companies. It's like a breeder for, especially for small business owners. The good thing, you see, I started from the sweet part. The good thing is that you will definitely have your records to show that you're not earning above 50 million naira. That is, your annual revenue is not above 50 million naira, but you will not be required to pay anything. Do you understand? You will not be required to pay anything until your business annual revenue begin to exceed 50 million naira. So there are some kind of businesses that I'm trying to think of. I don't want to use real estate, but there are some kind of businesses that you provide like a service, and then they maybe send you some money, and the whole money is not even your revenue. Maybe 5 or 10% of that money is what is your revenue. You will report that 5 or 10% of the money. Do you understand? That's the one that's yours. That's your revenue. So it does not matter if a billion naira is sent into your account. What is your revenue is what you will report. Of course, you report the other ones as, sorry, I want to be sure that this is recording. I want to be sure that, please give me a minute. I want to be sure that it's recording. Okay, it is. So you'd report what you have as your revenue, what exactly your revenue is. That is what you would report. Coming. Okay, so large companies generally. Okay, I want you to confirm, somebody in the chat box, please confirm you can see my screen once I share. Because I'm not seeing it from here. You can just type in the chat box to confirm you can see my screen. Okay, perfect, perfect. Okay, great. So large companies, obviously, they are not large companies are not exempted from this rule. And there's something about large companies and their minimum tax rule. So the large companies mainly have a minimum tax rule that um, if for example, your money is now, let's say you made an average of 55 million, annual revenue of 55 million, you're already above that tax, this thing. They still said that if, for example, your money is already above that tax range, there is what we call minimum tax rule. You will need to pay 15%. You need to pay 15% effective tax. Do you understand? So it's just some of the measures to gauge, what if my money is 49 and another person's money is 51, all of those things. So, but then there are some businesses that are not exempted. If you provide financial services, if you provide accounting services, legal services, you provide professional services that need like all this certification for you to be able to practice, you are not exempted. They do not regard those businesses as small businesses. Whether they are making less than 50 million or not, they would be able to, what are they calling it? They will still pay their tax. So for once you are into, it has specialized skills. Even when you are registering your CAC, you will see some of those categories, professional skills and all of that. They are not. Then, but if your service include maybe all these artisanal services like plumber, like all those vocational kind of, you are exempted. So it needs those professional services like accounting, legal, and all of that. That is where those kind of companies are not exempted from that. So like I mentioned, larger companies, they pay the 30%, 30% of their net profit before tax. So any business owner here, you are operating a small business is, I know we have been hearing this, but this is the reason why if you're operating a small business, it's important you register it. Before we go to the profit deduction, if you do not register it, the money will be calculated as your personal income, and it's a disadvantage on your side. If you do not register and separate your business income from your personal income, it's a disadvantage on your side. Why? Because whatever income that comes in will have to come in as your personal income, and your personal income tax is way different. The threshold is way different from your company income tax exemption. Do you get it? So one of the advice from this place is that if you run, even if it's a freelancing job you do, it's important you register your company. Even if it's a small business, you're an online vendor, you sell, even if it's thrift, there is no business that is even, because the stress, the everything in doing a business is not easy. So, but I'm just trying to say, oh, my annual revenue is not even up to 10 million. It's still important for you to register your business separately so that it's not taxed under that income you make is not taxed under personal income. Do you understand? So that is one of the key takeaway of this place. And so once you are generating an annual income of over 50 million, whatever that is the net profit. If you generated an annual income of 50 million and then your net profit of say 60 million and then your net profit is 5 million, the 30% will be on that. That's your net profit before tax is 5 million. The 30% will be on that 5 million, not on the 60 million. So you see there are some companies that they don't declare profits. They are always running at a loss. So some of those things is just for tax break. And you see, if you also look at the exemption, let me go to the exemption. Um, if you also look at it, they said net asset, total fixed assets, not exceeding 250 million. So it means you can also invest if say for example you are above or you are within that range, you can also invest in assets. Do you understand? So both your 50 million in your revenue and your assets should not exceed 250 million. So if your revenue is less, your assets can go higher. Do you understand? So all of those things are just for us to, have an idea. If you're a small business owner, maybe you do not have so much assets. You just know that with this, I am exempted from that tax. I just need to keep my records and be able to file when it is necessary. Okay, so I think I've talked about this. So I've talked about what we mean by accessible profit. That's your income minus all deductions. So they have allowable deductions. We'll go into it during the income listing. The allowable deductions are deductions that impact your business. So you say um I'm trying to think of an example. Let's say, for example, you've gotten to your net profit before tax, and then you see that you're already above the threshold of 50 million and you see that you still have a lot of money. You can now imagine giving government all of this money. Decide to do something that is not related. Maybe you throw a wedding or you throw a party or something, and it's not like his office party. Maybe you decide to go and spend it on something that is not related to the company or partially related to the company. You will be it That's not an allowable deduction. Every deduction should be related to your company. So if you see some of these companies where their CEO, some of their management staff or their senior staff get to what are they calling it? Get to maybe bring in receipts for their expenses, for their feeding, all of those things. So those expenses are related to the company because this person is working for the company and they can categorize them under the cost of labor. So one advice I would give here, even if this is your sole business, do you understand? It's important to also your expenses that are related to you as a business owner, you have to put it in as part of your expenses. Why? Because you are working for the company. It's part of that labor incurring in your company. But you should obviously know what are the things you do. Is not something that are totally far apart. Do you understand? Maybe you drive a car, you know that if you have an office address, maybe you've registered or you are reporting this is your office address, and then you buy petrol, you buy maybe gas or all of those things, you know that can, once you have your receipt, now this is the period to take as many receipts as possible, because some of these expenses you need to prove them when filing your tax. So you have receipts for those expenses. You can put it on company's expenses because this is like transportation. It can be categorized under your transportation cost for your business. You were going to the office, you were going to see a client, you are even going to market a product. All of those expenses, ensure it is added there. And then you can, when all of those expenses are added, you can also pay yourself salary, because you as an individual, we heard the news around that our NIN will be used as our tax ID. So you as an individual will still need to file for your own personal income tax. So that's the reason why I would say it's best to separate them, because when you do not separate your personal income from your business income, it's all calculated into your personal income, and it becomes a lot of money. It becomes a lot of money. And for personal income, the government did not give 50 million. So for capital allowance, it allows your business to deduct the cost of certain assets over time, giving tax relief on this investment. So I think what was stated is no more than 5% or something. Do you understand? To allow you to offset losses. So there is a case of loss deduction. If, for example, now your business is generating over 50 million of revenue, and at the end of the year you are having a loss, you can carry your loss forward to the future year and it will be deducted. So for example, there is a loss in business of say 5 million naira at the end of the year in this 2026. Then in 2027 you made a profit of 10 million. You can deduct that 5 million, and what you will now be taxing, I'm talking about now businesses that are already over 50 million in annual revenue. What they will now be taxing is that 5 million rather than the regular 10 million you made in revenue. So now we are looking at capital gains tax. This tax applies to assets that, taxable assets that you might have. Somebody asked that question. So one thing you need to know is that there are some exceptions. So if you have personal items you want to sell, you don't need to pay tax on that. If you get gifts, you don't need to pay tax. But if it's like your inheritance, maybe you got inheritance, this is as exactly as I saw it. So even if you got a gift but it's like an inheritance, you will need to pay it. But if you get regular gifts, you don't need to pay tax. If you get life insurance rights, when somebody does life insurance and then you are claiming the life insurance, you don't need to. If you have assets that are held for charitable or public purpose and the gains are used properly, you don't need to pay tax on that. So this is how it is calculated. The gains you get, that's the sales price or the market value of that price minus the cost of acquiring that asset and any cost in selling it. So let's say, for example, let's say it's a land. Do you understand? Let's say it's a land that you sell. What is the market value of that land? If it's 50 million naira, how much do you spend in marketing that land before you sold it? If it's 5 million naira, so it is that will now be calculated. So for individual, it will be calculated as part of your income. it will be calculated as part of your income. So if, for example, it is, let's say that 50 million naira land is 2 plots of land and half of it is sold. Do you understand? The gain that is apportioned to that half will be calculated. If the payment is received in installments, the way it is being spread, it will also be calculated. So there are some economic development incentives that, that the government has also identified, and they have, even if they are above 50 million, they have these incentives like agriculture, manufacturing, renewable energy. So the goal is to encourage investment. If you are into agriculture, you will be able to get a bit, what are they calling it, for value added tax. So you are making food and all of that, you'll be able to get a bit of break on that product. We'll get to value added tax, but I'm just giving an idea of this. If you are also investing in these sectors, you will get tax credits for it. But compliance they all have compliance rules and regulation to be able to adhere to it. It's just for us to have an idea. So that is basically it about the company income tax. If you have questions, you can drop them in the comments of the session. When I'm done with the whole review, then we'll take the questions. I would also read out some questions from the form we filled, and then we'll take the questions. The goal is for us to understand better, not to panic, but have an idea of what to do next and how to readjust. Start from readjusting your subconscious, how to readjust yourself going forward into the new year as an employee, as a business owner, as a freelancer, and as an individual that is both an employee and a business owner. So it's also important for us to do that. So like I mentioned, there are no, as of today, they are not going to block your account, they are not going to freeze your account and all of that to get your tax. So if you have multiple accounts, you will need to report all of them. Oh, the money I'm getting from here is for so this. The money I'm getting here is so this. And the best way to do all of that is to maintain a separate account for different purposes. So for example, if you run a business, like I will mention, the best way to just, that the only problem I will be thinking about, that is for persons that their business don't generate up to 15 million annual revenue. Those persons that are still below that threshold, the problem you will be thinking about is filing it, keeping your records, not, oh, how much you are going to take from me. Do you understand? So it's just better you take that first step, move your business to a company, a limited, and then you have you know that the next step is for you to keep accurate records. So for individuals, I in the flyers I shared, I said we are going to talk about income that are taxable and the ones that are not taxable. So it's important to note salaries, bonus, dividends, business income. See that they still, for individuals, they still categorize your business income. As long as it's entering into that your personal account, that business income is taxable. Capital gains, all of those things. See, the interesting thing is even bonus. I'm now wondering, does it mean that our 13th month will be taxed? Or maybe you performed well in your company and then your company decided to give you a bonus, that would also be taxed. So the thing is, they are saying low income earners, and they are putting an 800K threshold. But the truth is, somebody that earns 800K per annum, that's less than 70K. A lot of us, oh God, it's interesting that some persons, I know that there are millions of persons that earn below that amount, but there are some persons that even low in present Nigerian climate and the way things are expensive, somebody that is even earning 150K is even low income earner. That's the truth. Somebody that is earning 200K, it might not even go so far. But let's just look at it. So if you get like bonus from your company, that bonus is subject to tax. So they said employee salaries and bonus are subject to income tax with specific exemptions and taxable benefits. Definitely. So just for you to understand your net assess income. So there is a website. Okay. Okay. So this is important for you to maximize your income and ensure compliance. So there is a website. Okay. After I go through these deductions, then we'll go to the website and then we'll do practical, um, we get to have this practical knowledge of what your tax would be. So for your income, unlike the company, for companies, what is taxed is your accessible profits. But for individuals, what is taxed is your income after some deductions. So if, for example, you are making 50 million, once the statutory deductions are done, that's if you're earning 50 million as a salary earner, once the statutory deductions are done, the remaining is taxed. So we are going to go to those deductions for you to know. So if you are working in a structured company or a structured organization, your HR, your accountants, they will do all of this for you. So, but it's important to know that for one, your pension contribution is deducted. Most of us already know that. But if you are now an individual business owner, if you're an individual business owner, I'm still they expect you to deduct this and pay for your pension. There's a lot of companies that do pension. Do you understand? I know there are a lot of them. No need to mention. I can share some if you are interested. I can share some of them later in the group chat. What companies do for employees, pension contribution is usually 18%. The company contributes 10. The individual contributes 8%. Then there is the health insurance as well. The health insurance deduction. Um, sorry. There is the health insurance deduction. Some persons, so then there is interest on loan for a residential house. Let's say, for example, you got a mortgage and you are paying that interest you are paying on your loan can be deducted before the remaining is being taxed. If you have life insurance premium that you are paying, it can also be deducted before it is being taxed. Then, if you are paying rent, this one is also good for us individuals. If, for example, you are paying rent, say your rent is 1 million in a year, they can deduct you can deduct 20% of it, maximum of 500K. So it means if your rent is 1 million, they can deduct 200K. So it means if it's 2.5 million, the maximum they will deduct is 500K. If it's 3 million in a year, the maximum they will deduct is 500K. Do you understand? So those deductions are necessary for you to before your tax is calculated. So I want to show us this website. It's called fiscalreforms.ng. Fiscalreforms.ng. We can quickly do like a live this thing. If you are open to sending me a personal message, you can send me a personal message. If you don't want to type in your income, if you're open to doing that, I can help you calculate what your new tax will be. You can send me a personal message via the chat. You can send me a direct message via the chat. I can open, okay, 1.6 annual, good. So say you are a salary earner and your gross income is 1,600,000. This is it. 1,600,000. Then your NHF, that's the housing fund contribution, is usually 2.5% of your income. from what I got from this is that when you are 60, if you decide to go and get housing from the government, like all these mortgage houses they are talking about, you will get a lower interest rate and all of that. But if you do not maximize it in getting housing, when you are 60 years old, you can get this money you have contributed so far. So if it is 2.5 divided by 100 times. So it means your annual contribution to with 1.6 million, your annual contribution is 40,000. Um, your pension contribution, you are contributing 8%. That's 8 times. So your pension contribution for that year is 128,000. If you have interest, say your rent, if you can give us how much you pay as rent here, if you can give us how much you pay as rent, let's just, should we assume? Okay, let's say you, and you know for this, okay, you pay 400K, good. You know for this, when you are filing, you will need to now show, oh, where was I? So when you are filing, you need to show, I should even go and tell my landlord to send me my receipt. You will need to show a receipt to show that this is the amount you are paying as rent. Yes, NHF is so this is mainly it being excluded. Yeah, depends on your company. Do you understand? I think some companies exclude it. So it depends on you as an individual. Do you want to include it? Do you want to exclude it? Do you understand? So let's go to the 1.6 million. You have the 40,000 here. You have the 40,000 here. You have your pension contribution of 128,000. You have your annual rent of 400,000. This is 400,000. Okay, so this is okay, so it means according to this, oh, I put 160, sorry, it's supposed to be 1.6 million. So let's calculate. So this is, I hope you guys can, I hope you all can see my screen. So this is your gross annual. This is like the new tax law. Based on the new tax law, this is your contribution, this is your pension. The other ones are zero. Your annual rent is this is your taxable income. The first 800K is at zero tax. The next one, the next money after the 800K is 552,000. That is what is taxed at 15%, which gives you that 82,000. So if your annual income is 1.6, that's 113. This is the money you'll be paying as monthly tax, 6,900. Your effective tax rate is 5%. What this effective tax rate is, the 6.9 is equivalent to 5% of the amount you are getting. So they intentionally did it so that you will see that according to the old law, this is the amount you would have been paying for tax, and you would have been paying 8,820 for tax, and your effective tax would have been 7%. So the goal is for us to, when somebody asks what is the tax rate, there is no one tax rate. It depends on your income. As your income increases, the amount you will pay increases. I see somebody else said 1.8 million. The rent is 600,000. For this, the pension contribution will be. So the idea is you will need to all of this contribution, getting life insurance, getting this contribution, getting NHIS. It will help to reduce the amount of tax you will end up paying. So let's see for pension contribution for this person, 8%, 8 divided by 100 times 1.15. So for this person is 144,000. Say he say he's what if you have no contribution? It's important for you to have contribution, because if you have no contribution, the whole amount will be taxed. At least your rent and your pension too should be important. So the only reason you are not doing all of that is what are they calling it? Oh, give me 1 minute, please. The only reason, if you are not having a form of contribution, it means for your case, let's just remove all of those contribution. I'll come back to the contribution. Let's say you are living in your family house, you don't have this thing. So this is it. See the amount he will pay for tax, 1.5 million, 12.5 every month. But let's factor those contributions I said this one is 144,000, and let's even put his rent 600,000. Is this six? Oh yeah, 600,000. You calculate. So let's say he's only contributing. See, at least that rent you should put it, because it's like a tax break for you. You are paying rent. It's a form of incentive for you. Do you understand? So what he will be paying is, you see the difference. He will be paying 9,200 monthly instead of the 12,500 when there is no contribution. So if you do not put all of these deductions, like he stated here, is optional. If you do not put all of these deductions, the rate you will pay will be high. So, but when you are putting any of these deductions, you know that you are going to back it up with a receipt. So you cannot put pension contribution if you don't have like a pension account and a receipt to back it up. You cannot put NHF contribution if you don't have a receipt to back your payment up. If you don't put life insurance, if you do not have a receipt to back it up. So the truth is that he can be earning 1.8 million and still not pay any tax. Somebody else can be earning this 1.8 million and still pay tax. So let's say, for example, what are they calling it? His NHF is 2.5 divided by 100 times 1.8 million. I'm trying to calculate. Okay. So he's getting 45,000 here. He's contributing for health insurance as well. Let's say he's contributing 30K for him and his family annually. He did a life insurance premium for like say 50K. Okay, so let's say for this one now, he has a house on his own and he's paying, let's say, on interest, he's paying 300K. Maybe he did a mortgage and he's paying 300K. I'm coming, 300K. Let's see if he will have, uh, okay, so see where he stops now. His effective tax rate will be like 5K. The tax that is due him, the difference here is 431. Let's say we increase that he's paying, which of course might not necessarily be the case. He's paying this deduction of 131. He will just be paying 1,600 on tax. So as an individual, an employee, having this type of insurance premium can help you ease your tax. If you take up a mortgage, it can help you ease your tax. If you are paying, if you are paying rent, it can help you ease your tax. Do you understand? So all of those are what is important. If you also have, if there is any other person that you want to just have an idea, I'm going to share this link on the WhatsApp group. I'm also okay. I think I should just share it on this place. So let's say now, for example, let's say, for example, now what I was mentioning initially, that as a business owner, you decide to say, no, I don't want to register my business. I want to still run my business the way I've been running it before. You make an annual income of say 10 million. You see that this 10 million is less than is less than the 50 million you've or that is supposed to be tax free. But because this income is run in your personal account, it's calculated as personal income tax. And then let's say you even have all of these deductions here. Say you have 600K rent, or somebody said their rent is about 1 million, 2 million, like that. So is this 1 million? Okay, no, this is 10. Do you understand? When it is being calculated, see what you will end up paying as tax. You will be paying 125,465 as tax every month. Every month, because whatever you have as salary income, that is what you see is written as personal income tax. So that's the reason why you would see those posts saying you should register your business, separate it. Do you understand? So even if it's a small business, at the end of the month, you can say, it's my small business. The expenses that are related to the company that affects me, I've already charged it to the company. Because you also need to have like a personal income. This thing. You say, I want to be paying myself 800K or 70K or 100K every month from this my business, depending on how your business is. You say you want to pay yourself 100K, depending on how your business is. And you are, say your rent is let me put it at 500,000, depending on how your business is. You see that 3,750 is the only what are they calling, is the only amount you'll be paying on tax for both being a self-employed or a freelancer employee and owning your business. Why? Because your business is not yet, the annual revenue is not generating up to 50 million per annum yet. And then you are paying yourself this particular salary. And you will put it as salary. It comes into your personal account. So this is it. Instead of the previous 125K, you would have been paying monthly, which is so much for an individual, because you run a personal business. You end up paying this, which if you even decide to reduce it more, you might not even be paying anything at all. See, it's 1,250. Do you understand? You might not be paying anything at all. So this is the reason why online you will see, register a company account, separate the income. So I think I have gotten a lot of questions from this particular one. I don't know. I think I should take those questions that is pertaining to this particular one. Okay, if you have no contribution, James, at least your rent should be your contribution. Do you understand? Your rent should be your contribution, and they can give you up to 500K deduction, which means they can give you, it's 20%. So if your rent is 2.2 million, like you said, let's say your income is 3 million. Let's say your income is 3 million. You have no other deduction apart from your rent that is 2 million. Your rent is 2 million. So this is the amount you'll be paying in as tax. It's still high. You'll be paying 22,500 as tax, which you see the reason why it's important to now pay attention to some of these deductions. Do you understand? So because your pension is for you in the future. When you retire, your pension is for you, your life insurance is for your family, if anything happens. Your house, your NHF also is for you. If you want to get a mortgage, or when you are 60, you can claim this. Do you understand? So if you do not pay those deductions, like Shalom has asked, if you do not pay those deductions, it will obviously, from these calculations, it will obviously increase your tax. Then in terms of the bonuses, I would also want you to know that, the like I mentioned earlier, employee paying you some bonus is subject to tax. But when it comes to refreshments, if they are giving you refreshments, those ones are not subject to tax. So if they are sending you, your company is sending you money for feeding and all of that, they are not subject to tax. It just escaped. So for self-employed, how do they do this contribution? So there is, and all of these companies, they have their website. There is the NHF website. You have there is the National Health Insurance Scheme. I'm not so sure, but I think patronizing HMOs too can be part of it. Then there is the pension. There are companies that do pension. I know that because of tax and all of that, prior to now, these companies have not really been in individual pension contribution, but there will be an uptick of it. So you have all those companies like Leadway Assurance and all of that. So they do pension contribution. So you can actually pay. So most times you might just need to hire somebody that can do this task, or you can also you can reach out to them. It's just like opening an account. Do you understand? All of these things is just like opening an account. You open an account, you can set up, for some persons, if they could set up like a direct debit in your account, say this is the amount. The minimum for pension is 2.5. So that's for did I say pension? No, pension. NHF is 2.5. For pension, I'm very conversant about the employee structured company, or not the self-employed, because it has really not been prevalent prior to now. Do you understand? So, but you can reach out to those financial institutions that do that. You can also buy a life insurance premium. All of this will help to reduce the amount you'll be paying on tax as an individual. Then another most important one for a self-employed is to register a company and operate all those yourself, all those your income under a company, and you pay yourself salary. Even if it's 50K, you are paying yourself a salary monthly. If it's 50K, that's 600,000. But let's even remove all of these deductions. You are not you are not subject to tax. You are below, you are exempt from tax. Do you understand? If you say, oh, I just want to game this whole, not like game in a negative way. I'm not going to pay myself as a self-employed individual. I'm not going to pay myself more than the 800K income. Every other expenses will be calculated as company expenses. You will not need to pay any tax again. You will not need to pay tax as well. So for self-employed, I also want you to look at it. Do you understand? I also want you to look at it from that way. Separate it. Let it not be as personal income tax anymore. Then I'm seeing, how do I claim the rent? So it's not like you claim. When they say maximum of 500K, what they say is that they are going to, so 20% of your rent will be deducted. Maximum of 500K means is that once your rent, maximum of 500K is once your rent exceeds 2.5 million, because I think 20% of 2.5 million is 500K. So once your rent exceeds 2.5 million, if your rent is 300, if your rent is 3 million, I think it's supposed to be more than that. But what it will calculate is 500K. That's the cap. So let's say your rent is, let me say, 3 million. Sorry, I want to calculate and be sure of what I'm saying. Yes. So you see, your rent is 3 million. If your rent is 3 million, 20% of 3 million is supposed to be 600K, but the only deduction you are allowed is 500K. If your rent is less than that, you are still not going to get all the 500K. You are going to get 20% of what your rent is. Do you understand? So if your rent is 2 million, you are going to get 400. Let me show you where it is being calculated. This is 2 million. Let's say your income is 5 million and your annual rent is 2 million. Okay, sorry, this is 5 million. Let me put it as 5 million. Your annual income rather. So annual rent is 2 million. If you see it is 400K that is deducted. I hope you can see, I'm sure you can see my screen. If you see your taxable income, only 400K is deducted out of it. Only 400K is deducted out of it. So as an employee, your tax is paid monthly. But we'll get to the as a company own. Okay, so somebody said, what of us that are doing contributions? Okay, I'll get to that. So for civil servants, your tax is most likely taken care of. Do you understand? You will just see the deductions. And I think now they might begin to give you receipts. Prior to that, they might not be giving you receipts. But for now, they might begin to give you receipts for all of those. If you're a student and you are getting stipends, stipend is not, you don't need to pay, you will not have to pay tax in those things. You see the range, the annual income is 800K, and you know this annual is taxable income. Do you understand? So you've seen where I'm sure most of us have seen those what are they calling it, those information that are passing across, which is very true. If I go to my slide, I mentioned a place where when you get gifts as a student. So if your parent is giving you money, that's gifts. Do you understand? It will not be taxed. Where is it? I think it's under that capital gains tax. So once you get gifts, it will not be taxed. Do you understand? So you don't need to get this thing. So if for example you are an individual account, you have an individual account, what the withdrawal is not taxed. What is taxed is what comes into that individual account, and the part of what comes in, the ones that are taxable. Do you understand? The ones that are taxable, that is what is taxed. Like from my explanation, not all of them are taxable. Do you understand? If you get gifts, if you are repaying loan, any form of loan repayment, just like you see on that personal income, this personal income, this thing. What this interest on loan for owner of occupied house is, what they mean is that this one is even very important, in the sense that if you own a house and you bought a house on credit, or you got a mortgage and you are paying, you can deduct it from your tax. Those monies are not taxed. Do you understand? So if, for example, you own a POS, it's better to register the POS in a company's name. Get a POS and register it in a company's name. We know that is that 100 naira or 50 naira, or the amount you make in that POS business. That is what is your income. And so when you register, not necessarily the monies that come into the account. Do you understand? So you would, if you are filing your tax, you would definitely declare, oh, this is the kind of business you do, and this is this thing. According to FIRS, by 1st of September, 1st of January, the NRS platform will be live. And so we'll be able to review and get to see the information. But according to them, they are making it streamlined, easy for everybody to use. Do you understand? So in this whole scenario, you've seen that is also there are ways where you can avoid unnecessary tax, and there are ways where you might decide not to, you might be able to even avoid paying the tax. So, like I just mentioned, Phoebe, I will still review the questions for the ones I've not I'm not what are they calling it? I've not reviewed. So that we do not drag it. It's already we've taken the first hour. Let me go through my finish up the slide, and then I will take it up. So this one is family taxation. There are some persons that they have estate, they have some form of inheritance, they have trusts, they have those kind of monies. So it's also important that when you are they call it chargeable gains. When you are disposing an asset, it's subject to tax. Do you understand? Like you have properties, you have shares, you have investment that you sold or you exchange. Those are subject to tax and all of that. Then there is another thing of double taxation. This is for people that they work in maybe they work with companies outside the country and all of that. So it's important to note, to confirm from your company if your income is already subject to tax there. So there is a form of relief, but you will need to know if there is that, how do they call this thing? When, for example, we've agreed to be trade partners, these two countries have agreed to do this double taxation relief. You need to also confirm that. But for persons that are working outside the country, that is, you are in Nigeria, you are doing maybe you are working as a freelancer, you are being paid in dollars, you are working for a company outside of Nigeria and you are being paid in dollars. So there is that form of it. But in a case where you don't have that, or maybe they are not paying tax there, you will need to convert your money into naira, the equivalent of naira, and then you will pay your tax. And then you will pay, you can put it in that calculator, put in your exemption, put in your deductions, and then you know the amount you'll be paying. So there are other taxes and exemptions. I've only talked about the personal income tax and the company income tax. Now we are looking at stamp duty. Is legal, is applicable to official documents, contract, agreement, property transaction. We already know about stamp duty, but if there are some exemption, if it has to do with government bodies, very low transfers, I think for now it's below 10,000 naira, you will not pay stamp duty charge. But we are already used to paying stamp duty. That 15 naira they charge us once you transfer 10,000 to your district. So it's important to also maintain. So it's a form of tax. It's important to our bank statement already gives us that what are they calling it? The stamp duty charge. So value added tax. This is general 7.5% applying to goods and services with specific exemptions. Charity organizations, they are exempted. Religious institutions, they don't pay VAT. Educational entities don't pay tax. So for donations and research, for donations for R&D, that is if your company is into research, for this thing, there is a reduction in the tax. Then for small company and small business, for VAT, sorry, what I just mentioned, the exemptions are for VAT. Not all companies will pay VAT. So it's important for you to know too. Do you understand? It's important for you to know because I don't want to use the word wicked, but you know that people can maximize different opportunities to charge you more. There are some things you are buying, you don't need to pay VAT on it. I'm talking as an individual. And then there are some odd things also, you as a company, if you're operating as a company, you will not need to pay VAT on that. So your turnover and your asset determines the VAT you get to pay. Remember when I was talking about this is for VAT, please. Remember when I was talking about for company, I said for company income tax, the threshold is 50 million. for you to be exempted. But for VAT, it is 100 million. So even if you are doing above 50 million, you can be exempted from VAT if your turnover has not gotten to 100 million. And so that value added tax is what you pay monthly. Do you understand? So for here, they categorize you as a small business. In the company income tax, it's categorized as small company. So you do not mistake it when they are talking about tax and VAT and everything. When they talk about small company, they're talking about that registered company that the annual turnover is 50 million and below. When they are talking about small business, they are talking about that business that the annual turnover is 100 million and below. And that 100 million, that is where you do not, you are exempted from VAT. So I had to, sorry about this, I had to put them side by side so that we can have an idea. So you can be, if you are exempted from company income tax, you are also exempted from VAT. But you can be paying company income tax and be exempted from VAT. So it's just for you to understand all of that. So you know that that small business that is selling, I am coming. I think I have a place where I'm trying to look for it. I have a place where I had a list of, sorry, I have a place where I had a list of companies. 1 minute. I have a place where I have a list of companies that those companies will not be charged for VAT. So if you are into food supplies, those companies are not charged for VAT. Medical supplies, those companies are not charged for VAT. The essence of it, the goal is that those yeah, oil and gas export, crude oil export, goods for humanitarian projects, baby products, clothes, bottles, diapers, toys, car seats, you are not supposed to be charged for VAT in that. So if we will all turn to accountants, if you go to buy something from the supermarket and they are putting in VAT, you know that if you are buying these products, they are not supposed to charge you for VAT. Sanitary pads, tampons, you are not supposed to be charged for VAT. Military items, you are traveling, you're entering God is good. They want to do that, they are doing this thing. They want to add VAT to your fee. They are not supposed to charge you for VAT. Do you understand? All these road transport, shared passengers, you are not so. This, I actually copied them out from the Tax Act. So tractors, if you are buying farm equipment, they are not supposed to. If you are buying supplies in approved free trade zone, that's if you are doing export, you are buying things to export. That VAT expenses are not supposed to be there. Goods and services for diplomats, educational items, lands and buildings, money and security, government license. So these are basic food items, rice, beans. So if you are selling all of these kind of items, you know that you don't need to pay VAT. Do you understand? They are not supposed to. Medical and pharmaceutical products, including herbal medicine, they are not supposed to charge you for VAT. So the idea, according to them, is to reduce the cost of basic items that we need every day. Do you understand? They are not supposed, those things are not supposed to. But if you do processed if you do processed items, like you are doing things like cake and all of that, and your turnover is above 100 million, you can. Do you understand? The law is just taking effect. There could be like a back and forth and all of that, but I think for, especially when you are giving quotations and all of that, or when somebody is giving you quotation and they are charging for VAT, it's just important to know what exactly what kind of company they are. You know that if a company is categorized under small business, so there is now, we don't know how a company can prove to you that they are categorized under small business, apart from this. Because if a company is below 100 million turnover and they are charging you for VAT, they are charging you money that they will not remit. Because according to the law, they are exempted from it. So all of these things are important for us to note. We know that with time, it will become more streamlined, and everybody, everybody already understand. So if you are buying wheelchairs, fertilizers for agriculture, like the law actually benefits people that are into agriculture. If you are doing all of these things, medical service equipment, tuition fee, nothing like value added tax. If you are in doing exported goods, apart from oil and gas, nothing like value added tax. Electric vehicles. This is interesting. So if you are into electric vehicles or you are buying electric vehicles, nothing like value added tax. Do you understand? So these are other people that the government can exempt, maybe development funds and all of that. If you are going to eat, there is value added tax. Is when you are buying the food raw, there is no value added tax. But if you are going to like a restaurant, there is value added tax. They will add it for you to pay. So I'm going to go to the questions, but it's just for us to have an idea of it. So it's important. I believe that with in the first this thing, we've already gotten an understanding of this company tax, employee tax. Government believes that once you are earning above 800K per annum, you're a baller, so you should pay tax as an individual. But as a business, once you are below 50 million per annum, you are still a small business. Let's encourage them. But once you are above 50 million, you are no longer a small business. You should pay tax. So the compliance essentials, things we should know. Yes, from the new information, we'll get to see it by 1st of January that the FIRS has said our tax identification number will be our NIN for personal income, and for businesses is our CAC. So it means if you own a business, you would have to do your personal tax and your everybody will do their personal tax and then your company tax. So keeping of your record is very, very important. When you get that receipt from the mall, don't throw it away. You can you need to keep it. You need to keep your record, very important. I know, some of us that when we move abroad, or we are still in Nigeria, most of us, but we have relatives that when they move abroad, they will be like, they're calculating their tax, they're doing all of those tax things. Some of us that we do not want to go abroad because of those tax things, the thing has come to meet us here. And the challenge is how I wish, as we are paying this tax, we're seeing the effect in our country. We'll be very excited. So, but it's just for us to be compliant with it. I know that FIRS or NRS, the new guys, will not come and shut you down if you are not paying the tax, but you know that you are defaulting in a government law when you are not paying your tax. Do you understand? Having your record is also important so that at least the government knows that you are not supposed to pay tax. You are exempted. There's no way they can know that you are exempted if you do not have your record. So it's very important, very, very important to keep your records. Very important. So, like I mentioned, the goal of this whole tax thing is to streamline compliance. So it's not states, there are different categories. Before, they could not ensure that individuals are compliant, self-employed guys are compliant, but this way they are able to streamline it, and then there is a relief for small companies. Then they also recognize digital assets, people that trade in crypto and all of that. Whatever your gain is, it's subject to tax. If you experience a loss as well, you can push in the loss into the tax. So yeah, I said register your thing. If our NIN and our CAC certificate is going to be our tax identification number, then it makes the process more streamlined. So proper record keeping, this is to ensure that all deductions are done. Do you understand? This is should ensure that all deductions are done. Withholding tax, we've even started paying withholding tax. Some of us that you do an investment, some of this investment, the interest on the investment, you do is being deducted from your interest that you earn. So withholding tax these are more pertaining to companies. Do you understand that it applies to? So you should be able to track your benefits, claim all your deductions, because it will help you reduce your tax. It will help you reduce your tax. It will help you reduce your tax. So the one of the call to action, the major call to action for this, before I go for questions, is for you to separate your business income. You separate your business income from your personal income. If you have been operating a personal bank statement, a personal account, is time for you to register your business as a company to be able to enjoy the benefits. Keep receipts, send invoice. Even if you're a sorry, there is nothing like even. If you're a plumber, maybe they call you for to do a job, send them an invoice. Yes, I'm going to buy this. I'm going so that they know that the reason why I'm using jobs like plumber, jobs that have to do with service, where is your workmanship, that is your own income, so that they know that you bought tools or you bought equipment for let's say you want to change a pipe or something. The person most likely will calculate all of the money and send it to you. Maybe the money for the pipe, your workmanship, and everything. Do you understand? So it's important for you to issue an invoice. Let them know that from this invoice, this so amount is for the equipment you are buying. This is your service charge for what we are doing. And when they pay you, issue a receipt. Do you understand? And be ready to disclose our financials. The government want to see how much you make, and they want to see if you they want to see if you are tax compliant. So everybody, no matter what you do. I see a message that said, I thought artisans would be taxed. You might choose your being taxed or not being taxed depends on what you report. If you're an artisan and your annual turnover is about 100 million, or you are doing a business and it's over the 50 million, you will be taxed. Do you understand? But now that's why I mentioned, as an artisan, you need to report everything. Whether you are exempted or not, you need to report what you are getting. So for FinArchitect, we know that financial records, it's usually difficult. You make records every day. You might not be able to get what are they calling it? You might not be able to maintain an accurate record for your business. We actually have a web app that we're working on that is 95% ready for persons. This web app is just so easy in the sense that when you make sales, you can put it, every of your expenses, you can record it, and it gives you your financial statement in real time. Yes, I know that we have diverse audience. The goal is to have people from diverse audience. Once our product is live, I'm going to share it to us on the WhatsApp group. And then there are some persons that will see, I do not have the time to be logging on and all of that. I want to engage with you on WhatsApp. So once I buy something or this thing, and they give me my, what are they calling it, my receipts, or I get an invoice, I can just take a picture and send it to your WhatsApp number, and then you people help me arrange my finances monthly. And you share me that my financial statement every month. We can do that for you. This is for individuals, not for companies. This is for individuals. You want to record your daily transactions and all of that as an individual. You want to ensure that your expenses, even if you are doing, maybe we can extend for a small business, for small business owners as well. You want to ensure that those daily transactions are done. You can make use of our platform. We have a designated WhatsApp that you can send in. You upload. You can send us your document, we'll read it, and then we would put the expenses in the appropriate section so that you can be able to claim whatever deductions you can claim for your tax, and you have your records ready at the end of the month or at the end of year, depending on you as an individual, that you where you want to file for your tax. So for these services that we'll be offering, it's for 5K. We are just putting it out just to let people, I know that how do I put it? When you get a platform, most of these other platforms, they charge way high, and trust me, you will start seeing a lot more of them come up. Do you understand? Because you need to know what are your cost of goods, especially if you are doing a personal business. You need to know what are your cost of goods. You need to know the kind of expenses that are recorded in your operating expenses. You need to know all of that to be able to finally get what is your accessible profits. Do you get it? And so if your total revenue is also below that threshold, you would also need to file all of this. You also need to provide that information. Government wants to see that, oh, for me as an individual, my total revenue is less than 50 million threshold. You need to show a proof of all of that. So in helping you do your financial statements and having it in real time, that is why we are providing this service at this fee for some persons that are interested. If you are interested in doing that, you can reach out to me. Wait, you can reach out to me, or you can pay the fee. I'm going to drop a company's account number for you to pay the fee, and then you can reach out. We'll send you the WhatsApp message. Every day we'll reach out to you to get your finances. You know that what you are paying for is effective of January. So from the 1st of January till 31st, you will be able to upload your records. You can write it out. If you have receipts to back it up, you can always snap and upload. At the end of the month, we'll give you that financial records. Then I also had a lawyer that I engaged with, because I had to, my expertise is in finance, so I had to engage a lawyer concerning the whole, the tax law and the implications and everything. So there is this, the lawyer says he's going to do company registration. He's an accredited agent doing company registration. He will do company registrations for as many persons that are interested in having their company registered. You will get your CAC certificate, you will get your status report, you will get in your status report, your share capital will be up to ₦1 million. You get your MEMAT, the TIN number obviously comes. Then if you want like a e-letterhead design, it also comes in that package. Your ID card design, your e-invoice for you to be able to issue invoice and receipts for your clients that you are doing business with. It will all come in that package, and he's putting it out for 75,000 naira. He's putting it out for 75,000 naira. Then there's also another category of you getting your CSC certificate. This is actually a discounted price, because he says that registering a company is quite expensive now, but he's putting it out as a discounted price for persons that are interested. So there is a 50K package where you have your CAC certificate, you have your status report, you will get the same 1 million share capital, you get your MEMAT, your TIN number, your letterhead design, and ID card. But he will not give you what are they calling it? He will not give you he will not give you the e-invoice and receipts. So for the invoice and receipts, what it would contain is you will have your tax ID number, you have a unique invoice number that will follow a sequence. And because if you run a business and you need to file, the government, when they are reviewing all of these audits, they will not want to see like two numbers. It needs to follow like a pattern, a sequence. The full name of the supplier, which is you, or your business registration address, the date the supply was made, the name of the client, the total amount. Just like I mentioned for the plumber, if you are issuing this kind of invoice, you will be able to put in all of these details. So you're not just coming to take an amount and then the person calculates everything you need to buy and put your service charge in it, and then you calculate it. If you do not report it properly, the government will think that is the income you are getting. So you need to report it properly. You need to now back it up with an invoice that has been issued for that particular amount. Do you get? Because if the way audit works is that your bank statement, there is a proof of this money, there is the invoice or the receipt of the money. So that is how most of this will be done. And it's important for us to have this as an idea. So if you are interested, you can reach out to me, you can make your payment, and then you reach out to me. I'll drop my number on, this is my only number. I'm going to drop it on, it's a different number. This is also the number you would, because I own a company and also work for a different company. So I'm dropping a designated number. This is the number you would also reach out to for if you want your financial records to be kept. Do you understand? That is the number you reach out to. This is my own personal number that everybody engages, but this should be specific to it. I dropped it in the comments of this session. So I'm going to now go over to the whole question. If you have questions, you can please drop them in the comments of the session. You can please drop them in the comments of the session, and I would take the questions. And then we have 24 minutes. We have 24 minutes to wrap up the session. We have 24 minutes. So if you have questions, please drop them in the comments. Okay. So it's I'm seeing you say, how can somebody in diaspora declare his profit from his home business, if any? So if you have it's just the way you have your personal income. It's just with your bank statement and with the records you have, just like we've calculated here. You once their NRS website is up, the whole process will be easier for you. Okay, a director of a limited business company incurred an expenses not for business purpose. How will such expenses be assessed? So if there's no way that expenses can be put in for business purpose, then it will be hard for the person to declare it under the business. For civil servants that get salary and wages awards, with tax be deducted from the wages. So yes, now according to the information that is given, if you get wages, you get bonus, tax will be deducted. If you get bonus, tax will be deducted. I think I've answered some of these. Okay, so somebody is saying contribution for Ajo and all of that. So I understand, for example, this is your time to get, I hope he's still here. I hope he's still here. Say this is your time to get in your own Ajo money. And normally, when it comes to savings like that, based on the savings like that, what is taxed is the interest. If there is an interest on the savings, that is what is taxed. Do you understand? But when there is a cooperative, they won't tax it. So you can just put it as, oh, this cooperative savings, it won't be taxed. But when you get an interest, say everybody's contributing 100,000 naira monthly, and then you put it in one financial institution, and at the end of the month they give you maybe 7.5% interest. That interest, there will be a withholding tax on it. The institution will take it. But if it's like a cooperative like that, no. Okay, I think I've answered some of that. What about people who don't have? Okay, I think I've answered from that. So, Fabian, you would be able to report your income and expenses on that NRS listing when you are filing for your tax. So whether you are going to pay for tax or not, you will need to file. You need to be able to report your financials, what your financials are. For those that have two or more personal accounts, that is why you will need to report. So even if the money is in account A or account B, do you understand? You would report all of your income. Do you get? You report all of your income. So if you get salary, if you get bonus, that's the reason why I said for people that maybe you do a side hustle, side business, and all of that, it's very important you separate it and put it under that threshold of that amount, under that threshold of company rather, so that it can fall under the 50 million threshold, so that once they are taxing, they are only taxing your salary and your personal and the bonus you get from your company. So with this, after paying tax, are you supposed to pay VAT? So I think I have mentioned where you would only pay VAT. So if probably you go to a restaurant and they require, if you are doing like a processed food, maybe you are buying cake and all of that, you might most likely pay VAT. But in those categories I mentioned, if you are buying medical supplies, if you are buying food, raw food items and all of that, you don't need to pay VAT. So even if you go to what are they calling it? If you go to a supermarket and maybe you bought rice, you bought rice, you bought groundnut oil, you bought all of those things. If they're adding VAT and all of that, they are supposed to deduct it. They are not supposed to calculate VAT on those other products. Do you understand? So if you do not have, so for you not having this thing, you will need to file what you have at the end of the year. Do you understand? And then whatever you get to pay, whatever that is due, you will pay. Yes. Yes, he said, and what would have finished eating before you pay? So restaurants that charge VAT, it's hard unless it's, I don't know, maybe regular cafeteria. Those ones that you know that their businesses might not be up to 50 million turnover and all of that. But you see all those restaurants, you will pay. Oh, and the interesting thing is that government that is you say they pay after the bill, they give you the bill after you finish eating. You will need to pay that. So unless it's raw food, you will need to upload your record under their portal. That is how government will get your record. That is how government will get your record. And when there is non-compliance, that is when they might now put up a measure to ensure that there is people comply with it. We don't know the measure for now. But they are not going to block your accounts. They are not going to do all of that. They do not have the right to do all of that. But you will just have to file a record. If they put in the punishable offense, I did not read that part of the law, but if there is a punishable offense for not paying your tax evasion, you know that tax evasion is a punishable offense. So whatever the law is saying as regards tax evasion will be applied to you. Do you understand? When you do not file or pay your tax. But if you are exempted, you cannot just know you're exempted from your heart. You need to let the government see that you are exempted. So that's the reason why you need to keep your records to be able to show the government that you are exempted from paying tax. Do you understand? So that is it. Then yeah. If I already have a business name registered, but I want to register as a company while keeping my business name, will it cost the same? Okay, so that's, you want to change from business name to, it looks like I've put in a wrong number. 091619876. You said the WhatsApp does not work. Please confirm if, let me check the number, 1 minute. So if you want to do an upgrade with that, yes, you will be able to do that as well at the same fee. The fee for the 5K is monthly. Sorry, it's not a one-time payment, it's monthly. So it's so for if you are doing an ajo and you will just put it as contribution. Do you understand? you will put it in, everybody will know that they are putting it as contribution, or better still, put it as a gift. Do you get? But you know that if every year or for the beginning of the year to the ending, the only thing you get is a gift and you are not a student, do you understand? It will call for questioning. Do you get? But for this kind of this thing, it's also best to register a cooperative. If it's a serious ajo, it's best to people register it as a cooperative. Let the money be sent to the account, and it's easier to explain in that aspect. Do you understand? If I'm coming, please. So registering it as a cooperative is like the best. I'm coming. Let me get the number. Registering your ajo as a cooperative is like the best. Is like the best option. Okay, I'm dropping the number on the WhatsApp now. 0916-198-7636. Okay. Okay, what of someone that earns 270K, 207K per month as salary? Let's quickly go to that calculator again. Let's quickly go to the calculator. So this, I've dropped the link for this calculator. You can check it out. You can use it to calculate how much tax you will be paying. 207,000. Is this your gross monthly times 12? If it's your gross monthly, it means is 2484,000. If you work in a structured company that they already pay you salary and they deduct tax, you know that this one's already, you're already paying it. Another form of tax will not be deducted. If you now have another means you get income, that is like you have a business, it's better you register it and separate it entirely. Do you understand? But if you say 207, I'm thinking that this is already subject to statutory deductions already, so you will not be charged for tax again. WHL operations, I don't know if you are on this call. I would want to know if this is your net. This is the amount that hits your account after all of those tax deductions. If I use my ATM card to pay for something and can't put a description, so if you pay for something, they are supposed to give you receipts. Do you understand? They are supposed to give you receipts for those ones that maybe you are buying food items. So if you see the basic things that there are no value added tax and you don't need to report and all of that, is maybe you are buying food items and all of that. Do you get? You know that there is a deduction that the government recognizes, and then for personal income, I believe, Ronki, you are talking about personal income. After all of this, once your income comes in and all of these form of deductions are done, any other deduction is not recognized. Is what is left from this deduction that they tax on. So whether you go and buy something or you go and pay for something and all of that, as long as it's an individual, this is, if you are contributing, if you are contributing for National Housing Fund, NHIS, pension, interest on loan, annual rent, or life insurance, these are the deductions that government, as of today, for an individual recognizes. Do you understand? And the annual rent is up to 20% of capped at 500K. Do you get? So when you are paying for something, for an individual, they are not taxing you on what is left. They are taxing you on what is left after all of these deductions. So if you do not make any of these deductions, they will tax you on gross for an individual. Let me show you, for example, let's say there is no reduction here. You see that is that 2.48, that's the taxable income. Do you get? So once money is leaving your account, it's not really their this unless it's for there is a purpose for it. If you are using it to buy, it doesn't affect them. It's income that they taxed on, not necessarily your expenses as an individual. So where expenses comes in is if you run a business. Do you understand? Where other expenses come in the tax is if you run a business, if you have a business and all of that. As an event decorator, we rent decor items and some of the charge VAT. Yes. So so as an event decorator, renting of these items with time, we will be able to streamline companies that are supposed to, when you are renting, even you as an event decorator, you are supposed to charge VAT. But they've given us what are they calling it? They've given us a break of 100 million naira per annum. That company is normally supposed to disclose whether their annual income is above 100 million naira. So if you are looking for, if you are going to a big company that their annual income is above 100 million, they will charge you the VAT. They are justified in charging you VAT. But if it's like a small company, if they are able to disclose. So all of those measures in terms of disclosing whether they meet that VAT exemption or not is still vague. Do you understand? For you to be able to claim. But normally, if they are below that threshold, they are not supposed to charge you VAT. Yes, you can upgrade your business name into this thing. It's under post incorporation. You'll be able to upgrade your business name into limited. So if you have a business name and you don't want to what are they calling it? You don't want to change that name, you can upgrade it. And you as an event decorator too, if depending on your category as a business, you can also charge the value added tax once your annual turnover is above that. So based on that law, I didn't mean there is the calculator. The only calculator I'm seeing here is for personal income tax. I did not see for business when I searched for the calculator. I didn't mean but it will be hard because different businesses have different expenses. So it will be hard for them to streamline business and their expenses and what they should charge. Do you understand? Yes, you will get the Zoom recording. You will get the Zoom recording. I have the recording. I have been recording. I would even split it, or we can just have everything. Do you get tax based on all the money that comes into your account or what is left at the end of the year? For those who are self-employed with unpredictable income, if you are self-employed, that's you, maybe you provide a service or you have a personal business, or you provide a service. One is that the tax you file is at the end of the year, but you need to keep in your records. Do you understand? But then you now know how much you need to pay as an individual. If you don't want to separate your business because you are self-employed, you don't want to separate your business from yourself, whatever that is now made at the end of the year, once it goes through these deductions and calculations, you will know is how much is your total tax for the year, and then you pay it. But if you separated it now, yes, your income is shaky, which I would advise for you to separate it no matter what. Let that money be entering the company's account. Even if you are able to pay yourself a salary this month, and next month there's no money to pay yourself salary, let it be that, at the end of this is what you get in the month for your business, and this is what you get personally. Since your income is unpredictable, look for the lowest amount you have ever done and use that to provide a salary range for yourself. Do you understand? So that you can have something because you cannot say, oh, you don't have any form of income. Do you understand? So that you have something you will be filing for your personal income, and your company has something they will be filing for their personal income. With that, you might not even have to pay any tax. As long as you have your record, you might not have to pay any tax. I'm saying in worst case scenario, when maybe there is a business today, and then for 1 month there's no business or something like that. I'm just saying in worst case scenario. Or maybe you make 1 million this month, next month you are making 300K and all of that. Just look for the month you can use. Is one of the things I said, it's almost 4 o'clock. It's one of the things I said I was going to do. That I for some persons that can send me their bank statement, I can, based off, especially for people that are self-employed. If you're an employee and you're already being taxed, I think you already know what you get. But for some persons that are self-employed, you can send it to me as a DM. Because of our time, I can help you review it and see what are your taxable income and the income that will not be taxed. So it's important to put a structure, whether you are self-employed or not. It's important to put a structure for that. Do you understand? Because you will file at the end of the year. If you are using your personal account for your business to receive money and perform transaction, let it end on 31st of December. Let it end 31st of December. Why? Because if it doesn't end 31st December, they will calculate everything that is coming in as an income. Remember, as an income for you here, and they will tax it. So it's better, whether it's pepper you are selling. I'm not in any way trying to demean people selling pepper, but no matter the business you are doing, separate it. Why? Because most of this business we do, all of the monies are not ours. You see the reason why they said legal, accounting, those people that provide professional services, is because most times it's off their knowledge they are making the money from. They might not be buying so much. Do you understand? It's off their knowledge they are making the money from. So they feel that these people are not spending so much on cost of goods. But for you that you are spending money on cost of goods, it is important you separate it. Let it not enter as your personal income. I would encourage you, Taiwo, to register a company, and then register a company, open an account and use it. There are microfinance banks that can give you even money points. I think a lot of them now, they can give you an account in 24 hours. You don't need to do all those filing for corporate bank accounts that can be stressful. You can maximize all those microfinance banks. They will give you a company account in 24 hours, and then you use it for your business, but separate it. Separate business income. Narration is important, but you know that you cannot be saying all the money you got in is gift from January to December. Are you not working when you are not a student? Do you understand? So, and you know that with NIN, with our information, they can easily trace what you do as an individual. So that we can stay compliant, it's just important that we are able to keep our records and do what is right for ourselves. Then we can also hold our government to we can hold our government to we can hold our government responsible when they are not doing what they want to do. So for businesses that maybe you do not need what are they calling it, businesses that probably do not need invoice, do not need receipt and all of that, you can maximize the 50K own. You get your letterhead. You can even use your letterhead to issue out invoice and all of that, as long as it has this thing. But for the other ones, you would be able to, you can, if you know that your service, especially if you're offering a service like this event decorator, I'm sure you might already have. If you do not have, it's important to maximize the opportunity. You need to issue an invoice, especially if you are doing something that involves that part of the money you get is maybe to buy something. And that is what most businesses contain. Do you understand? Part of the money you are getting, your cost of getting it is large already. Maybe you are getting a 10% service charge and all of that. Is very important to issue an invoice that can be traceable. And so these are all you will get from the process. It is already exactly 2 hours we started this webinar. Thank you very much, everyone, for joining. Hey, I was supposed to answer some questions. If you have more questions, I'm going to drop the link to the WhatsApp group. I would continue to engage with people on the WhatsApp group. I've opened it up already. If you have more questions, you can drop it on the WhatsApp group. You can, if you need any clarification, you can also reach out to me. I would also drop my colleague's number as well. So I know that there are some persons that are not on the platform that are here. Um, I mentioned the service we offer from at the beginning. I'm coming, please. I'm going to respond. I'm trying to get. So, but I hope this has been quite enlightening for us. For us to have, at least we've been able to have some form of clarity. We've been able to have some form of clarity um, as regards this whole tax and everything. Um, So I would also share on the group the link for us, the tax calculator. For us, the service we offer, like I mentioned, we do financial projection and modeling for business that are starting up, and then existing business will also help them to record their finances at FinArchitect. So you can either reach out to me on this my WhatsApp line, you can just introduce yourself and just tell me what you are interested in, or any of this line. So for the financial record I mentioned, somebody asked if it's a one-off. Sorry, the 5,000 I mentioned is monthly. It's not a one-off fee. It is monthly for us to be able to file your record. I'm sorry, not file, sorry, for us to be able to record your income and expenses appropriately and provide you with a financial statement at the end of the month. So you can reach out to me in any of the two numbers. So for some questions I did not answer that were shared on the form, I'm going to look through them. If they were not mentioned, I'm going to also reiterate it. You can join the group also for updates and feedback. Thank you very much, everyone. Enjoy the rest of your evening. Bye. Thank you. If you also have like a compliment to share with me or a feedback as regards the session, please, you can share with me on the WhatsApp group if you belong, or you can also send it to me on my personal WhatsApp. The first number I dropped is my personal WhatsApp, so you can copy it and share with me on the personal WhatsApp. You can also follow us, finarchitect.ai. I forgot that part. You can also follow us, finarchitect.ai. You can follow me on IG too. My name is Grace Oliver, Grace of the Good Life on IG. I like good life on IG. So you can keep in touch also in the group. Like I mentioned, our goal as a business is to guide you through your process, we are interested in the financial health of every startup or every business we come across, and then we want to guide you through the process. So I'll drop a message on the group. Thank you, Twist. I'll drop a message on the group, and then we can engage as well.